So now the company is like a bank. So bank is giving you cash and you write down the promissory note. So what is the entry? Notes receivable to cash. Cash is going out from the business. Cash is going down. Cash is on the credit side. Account receivable rises. So account receivable is our asset. So which kind of account receivable here? This is notes receivable. Since the name is mentioned, so we make a subsidiary ledger L. Lauren Holland, right? Or you can just write it down, notes receivable as well. Don't worry about that. Right? Now, at December 31st, 2014, remember, this note is issued on 31st of August. 31st of August. So business closed on December 31st. So how many months passed? September, October, November, and December. 4 months passed. Matching principle. 4 months interest rate must be recorded in 2014. But did he pay you interest? No. He will be paying you at once after the maturity date. But we are eligible to earn that 4 months interest rate. So interest rate is how much? 9%. Principal is 1,000. And time is 4 by 12. Answer would be 30. So we need to make the entry. Did we receive this interest? No, it means interest receivable. We will receive interest later. So this is interest which is eligible here. We have this income. So it would be interest income or interest revenue, right? Interest receivable to interest income. That would be the entry because we didn't receive the actual cash, right? We create receivable. Which kind of receivable? Interest receivable. And our income is interest income or interest receivable, right? This happened on 31st of December. Now, what happened on 28th of February? On 28th of February, he paid us principal plus all the interest, right? So on 2015. In 2015, how much income or how much interest belongs to 2015? Only January and February, 2 months. 2 months, that's it. So our interest would be 1,000 multiplied by 1,000 multiplied by 9% multiplied by 2 divided by 12. I think answer would be here 15. So total cash they receive 30 and this 15, 45, 1,045. 1,045 they received, right? 30 belongs to the previous. We made an entry here. This receivable that they need to pay us. So you see, they paid us 30. Interest receivable, right? And 15 belongs to 2015 interest income, so interest revenue here. So sometimes, many students, they have this difficulty to understand this combined entry. So I'm just going to give you that one, that this is just the matter of 2 different financial year. If it is one financial year, then we don't see here receivable. Just we need to write it down 45 here, that's it. But since we have a 2 financial year, so we need to follow the matching principle. So 2014 income belongs to 2014. So we charge income over there. We made it receivable received in 2015. So we decrease our receivable here. And 2 months income we receive in 2015. So we record in 2015 these 2 months revenue. So let me just clear this mess so that this entry looks very clear to you, right? So it's not like that you pay interest month by month. No, you pay interest plus the maturity at once after the expiration of notes receivable. Note receivable expired on 28th of February 2015. So you will pay at once the whole value. That's it. So everyone understand? Harry, Anthony, Marilyn, Pinyo, Nam, Marilyn, Nam.
Yes.
Good. Okay, let's move forward. Now, accounting for note receivable, we already talked about that. It will be, it is written as an annual percentage term. If you are using months, divide the months by 12. If you are using days, divide the months by 365. That is a standard value. You can also divide 360, but the norm is 365 days. So we don't use normally 365 days. So show how to speed up cash flow from receivable. We have just a couple of slides left. Sorry about for extra time. Just be with me for a couple of minutes. That's it. We are about to finish. So show how to speed up the cash. So there are some strategies you can speed up the cash. So you gave 30 days to customers, and normally customer will wait 30 days to pay you, but you can also speed up to receive the cash. Number one, sales discount. You can give them discount. Okay, if you give us, if you give, if you give us in 10 days, we will give you 2% discount, right? Interest on past due balances. If you spend even 1 day after the payment date, we will charge you interest. So people will be paying you on time. Effective credit and collection procedures. Like I told you, there are two separate duties. Good control system gonna increase your efficiency and all the stuff. And emphasize credit card and bank card payment so that directly it goes to your bank account and you can see that easily. Rather they hand over to you, and maybe the person who in charge to deposit to the bank, he didn't come for 2 or 3 days, so money is on the desk, it's just wasted for 2 or 3 days, so it's become it's lying over there idly. So you encourage people to pay directly to the bank through your credit cards or bank card. If you are paying through credit card or bank card, what will be the entry? Simple. So let's understand it through the example here. For example, Apple Corporation sells computer and peripheral devices for 5,000. At one of its stores, the customer pays by Visa card, and Visa card charges 2% processing fees. So how much you received? Company received 5,000 less 2%. And rest of the stuff is charges to bank charges. But customer will be paying off from its duty of 5,000. So entry would be cash receipts 4,900, credit card discount, which is expense increase, debit, right? $100 is the amount that you pay for Visa card, and sales occur. That's it, right? Similarly, this is a sales. If customer pay you back, then it would be account receivable. Since sale occurred, this is direct cash sales. So here, the sale revenue. If customer is paying you through Visa card, instead of writing sales revenue, just write it down here, the account receivable. That's it. Now, selling the receivables, or we call this factoring, which means if company has 1,000 worth of account receivable that is going to be collected in 30 days, company can sell its 1,000, company can sell its accounts receivable to another party, to some security companies or collection companies for example, for $800. You can say that, okay, if I need money right now, but my money will come after 30 days, which is 1,000, but I need money right now. So you can sell your account receivable to a company, to some security companies, those who are specialized in that, we call this factoring companies. So they will give you $800 right now, and now customer need to pay them rather than paying to you, right? So we call this a discount factor. Discount factor is 200 that you offer to the security company or factoring partner. A factor pay discount price, right? So you are a factor, you pay the factoring party discount, which is 200, so that they collect and they wait for 30 days and they receive 1,000, but they give you 800 at once. This is expensive method, yes. You use it when you lose control over your collection period, when there is so much, chaos, fraud is in your in your company, and you are losing money, or if there is cash desperately needed. Without this one, you may go bankrupt, or you may miss a huge payment, or maybe your reputation is questioned. Then you do this kind of stuff. Benefit is that you receive immediate cash receipt. Normally it is used by companies who have a weak or insufficient credit history, or those who have a sufficient amount of debt. If I have a company and that company is excessively debt oriented, so my customer already know that this company is going to bankrupt, why we pay them? It's already going to bankrupt, so nobody going to come after us. So we will just say that, no, we are not paying that, right? So they intentionally delay the payments so that, the company is not paying towards 100% attention towards us for collectability. The company is paying attention towards other matters, to resolving their code issues, insolvency matters. Also, the customer basically delay all the process. So when factoring happens, what happens? Let's see the illustration here. Suppose a company wishes to speed up its cash collection. It sells 100,000 accounts receivable and receive 95,000. 5,000 it give the discounts. We call this cash to financing expense, or factoring expense to accounts receivable. In case of visa application charges, this would become visa application charges. In case of factoring, this will become factoring charges, and that's it, right? So that's all from our today's chapter, learning or accounting for account receivable in our accounting, how we account for our account receivable. So up till now, what we have done, cash and account receivable. So next class, we will be discussing inventory. Before next class, we will be having our assignment 5. Remember the due date is before the next class, and all the procedures are the same. Okay, you must be in Word file, rename your file accordingly. Okay, if you have any question, you can ask, otherwise lecture is over. Thank you for bearing me 8 more minutes. I really apologize for this 8 minutes delay. If you still have any question, you can write us in our WeChat group as well. I will be happy to answer over there. No more question, girls and boys? Marilyn, Harry, Nam, Anthony?
No question.
Okay. Then I will be stopping our recording here. Okay, see you guys. See you next time with player, and I wish you stay healthy. Take care. Bye-bye.
Bye-bye.